The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 11th, the wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Look, the markets are moving lower. We're going to kind of can the rest of the opening out here, just simply so we can go take a look at what the markets are doing, key levels of support for you. But of course, I would absolutely love to hear from you. And you can give us a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. We'll take a look at whatever instrument it is, and I'll give you the best analysis that I humanly possibly can. And of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started right now. We've got all the indices in the red, but we want to put that in perspective as to where it's trading into and what it's doing. So right now, you've got the Dow off almost 5%, 1,238 points. This is becoming normal price movement for us each day. So we just have to get used to these large numbers and large percentages out there. For you and I, it's about being able to identify support and resistance and understand how price reacts at those different levels. NASDAQ 100 is off 347 points. Russell down 74. So everything down 5%. Spot volatility index trade down to 53.38. Gold's off $13. Bonds are up nearly 1 point out here. We're looking at the June 30-year Treasury trade out 178.08. So let's get right to it. And to get right to it, let's begin by coming over and so I guess we'll do it like this. Let's take a look at, I'm going to switch back and forth between the Qs and the NQ out here. But just to give you a feel for what yesterday formed out here in the marketplace. It generated in the NASDAQ itself, and here we're taking a look at the QQQ. It generated a Rhodes Momentum Indicator bottom pattern out here. Did it with a hammer candle. So the low of yesterday is really important because if price were to close below yesterday's low, not Monday's low, but yesterday's low, then we would be able to invoke that expression. If you close below the low of a hammer candle, if you're wrong, you're long. But right now, there is still a bottoming signal inside the Qs. Okay, Steve-O, if there's a bottoming signal inside the Qs, I see your Rhodes Momentum Indicator pattern. Where is intraday support? Okay, let's go find out. Let's start by taking a look at the 30-minute time frame. And on this 30-minute time frame chart for the NQ, what's nice about this is, although I don't have the tool on here to draw it, this generated yesterday a Gartley buy pattern. The A point is right here where my cursor is at. Hopefully you can see it. It's right where it says the capital letter D. That was the A point. The B point was bar number 6 of the TD setup 9 count. The retracement right up into Stevie's green line where it was deflected, and then the D point, which also made a TD 9 count bottom out here at about 12 noon. The confirmation came on the following candle, which created that 3-river evening or morning star pattern. So that's the bullish pattern out there. Now, what price also did on a 30-minute time frame, it began to move up. In fact, it topped out. This was last evening. It topped out with a TD 9 count pattern. It was bar number 8 that it topped out with. Now price is pulling back and it's testing support. You're watching it right now. I don't know whether support will hold 80, 10, 75. But if you were going to ask Stevie, where is support? It's really simple. This is just mathematical calculations. This is nothing that I'm pulling out of my arse or anything else that I could pull it out of. And so the NQ is at support. So here's what I want you to picture. The larger picture, which would be the daily, on the daily time frame, you got a beautiful bottoming signal, whether it was the NQ on a daily base, whether it was the NDX 100, or whether it was the QQQ. It doesn't matter to me which one you use out there. And now if you were to say to Stevie, okay, you know what? I want to take a chance on romance out here, and you're going to ask me where is it that you would enter to take that long trade. It's an 80, 10, 75. We're trading 80, 16 right now. Now, the cool thing about this is your back is up against the wall here. You don't have to give it a lot of room, 2 bars over a 30-minute process. But if this level of support fails, where's the next level of support? So far, it's held. Where's the next level of support? Well, let's just take a look at, let's go up one time frame. Let's just simply go to the 60-minute time frame, see if we can see it. And we can. So the next level of support would then be 79.76. That's the bottom of its profile. And then below there would be the breakout level of 78.14. Those are the areas to be watching. What's in place right now, what's in play right now in the 30-minute time frame, and this is, I would think we want to watch the NQ, because I think if we go over, we're going to go over and take a look at the ES and YM, do it for the same time periods out here, but more likely than not, they have already pierced their breakout levels. So it's really all going to be about the strength of the NASDAQ. That's why you and I are focusing on this right now. If the markets are going to hold up or propel themselves higher, and right now, if you take a look at this chart here on a 30-minute time frame, if we removed all of Stevie's signals and just left the bars out there, what do you see so far? Do you see 3 higher lows? And do you see 3 higher highs? Because that's what I see out here when we just simply remove ourselves from the emotional aspect of what the numbers are saying and the large numbers that are out there, and just simply come back and take a look at this. So let's watch the 80-10-75 area. Let's especially watch it over the course of the next 18 minutes when this 30-minute bar completes out there. So now let's go take a look at the ES Mini. Let's do the same thing out here. By the way, the ES Mini, the SPYs, they all did the same thing, and they generated nice bottoming signals on the daily time frame yesterday. Here, as we take a look at the ES Mini, its key level of support was 27.55 on the 30-minute time frame. That was the TD9 count breakout level. We are trading just slightly below that, and we also happen to be in wave number 7. That is letter G on my screen out here. So we know that when we do get to wave number 7 or letter G, that can be a bottoming signal. Now, that hasn't been confirmed. We need to see a higher low on the next bar. That would be the 1:30 to 2 p.m. bar. Otherwise, that pattern continues to expand. So this is piercing. This is breaking an important level of support for the 30-minute time frame. If this level fails, then where's the next area of support? Same thing. We come up to the hourly time frame. And on the hourly time frame, price right now is testing the support of its 60-minute bullish structured market profile, basically at about 27.45. So we'll use 27.45 as a number. So now you got the NQ testing support. You've got the ES on a 60-minute basis testing support. No bottom signal out here other than just back to support. Slightly below support on the 30-minute time frame, but you've got things back at support here right now. Interesting, isn't it? You and I were just out here. You are reading the charts along with me, or at least I hope that you are. I hope at this stage of the game, for example, I'll switch back to the 30-minute chart, and I just simply I'll punch up the Dow Equity Future contract so we can see where it is at out here, and you can tell me what I'm about to share with you. Now, if you can do that, I mean, that should really be, hopefully that is your goal in watching this show during the hour, watching the replay, whenever it is that you do, because these are technical tools. I really try to use the KISS theory, keep it simple, Steve-O, and just be consistent with this, certainly try to be consistent. And here the level of support in the Dow Equity Futures contract, 23,822, being pierced right now. Let's go take a look at the hourly time frame. Where is support out here? It's trading below the bottom of that 60-minute profile. So it looks like the Dow Equity Future contract may want to make a move down to 23,424. But still, that is support. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow off for 12.19, S&P down 129. So let's continue taking a look at trying to understand what the markets are communicating to us. So we began the show by taking a look at the QQQ series ETF. We know that it formed a Rhodes Momentum Indicator bottom. We know what I didn't do was I didn't do this. Because some people, you might be new, and if you're new, thanks for listening in. Maybe you're still been listening for a while, but it's always good. The repetition is the mother of all skills out there. So here you're going to see these black diagonal lines. This is nothing Stevie draws. This is simply my automated strategy out here that helps me to identify a Rhodes Momentum Indicator bottom. Price pushing lower, doing less relative energy. Now, it's a 5-step process. Yesterday was step number 2 in that process out here. We had the bullish reversal candle. Here, I'm just using a bar chart so you can see the number of times on a daily basis that we've seen Rhodes Momentum Indicator bottom signals and what their results have been. So we'll just simply pull this back. This is why you're paying attention. Now we're back into 2013. You can see that nice Rhodes Momentum Indicator bottom. I promise you, at most of these time periods where price was moving lower, it was similar, not totally similar, but similar to this with regard to uncertainty out there. And here you can see back in 2011, the signal that fired off. You can see back in 2009 at the bottom, the signal that fired off. You can see in the 2007 to 2009 decline, you can see some signals that fired off. And so it's worth paying attention to. That's why you and I are paying attention to it and trying to break it down. So let's go from there to just take a look at the QQQ series ETF to try to understand the volume makeup so far today. So let's take a look at our 3 time frame charts, but we're just really going to focus in on the daily time frame. That's all that you and I are interested in right now. Yesterday, because it did not make a new low, you and I can say with certainty that what the QQQ series ETF was doing was pushing higher. Wasn't pushing lower yesterday. I'll move my cursor away. The pushing lower would have been the day before. Yeah, and that day before had volume of what? It had volume of 116 million shares. Yesterday was 100 million shares. Price closed over the high. That's even considered a test and rejection of that swing point and to close above it on lighter volume. That's a buy point. That's just using Tom's work out there, Tom's swing point. Tom, David, whoever it is that actually developed that specific tool. But we know that's a rejection of price. Now, not much of a rejection when you're back in there. Well, how are we back in there? Right now, the volume is 45 million shares. We've been trading for 9:30, 10:30, 11:30, 12:30, 1:30. So let me just come up here. I can see how good I am with hours. So I'm just going to punch in 45. And we've been trading for 4. And divide that and then multiply times 6.5. 73 million shares is in essence the current projection from a volume standpoint, still 30% lighter than the move higher yesterday out there. You do see a new profile that is formed out here inside the QQQ series ETF, and that bottom of that is at 194.86. I would still use yesterday's low as the place that there was a close below yesterday's low that I would say, okay, probably time that this trade isn't working out even with the signal that we got, and I would have to say time to perhaps jettison that position. And yes, subscribers and I went long the Qs yesterday, so part of doing this is a little self-serving to provide them with the update as to what the markets are doing now, why, and when. And we bought that Gartley buy pattern yesterday on that 30-minute time frame. Now, we talked about, I just mentioned the 30-minute time frame, so what do we know now? At 1:22 in the afternoon, well, support is held. Don't have a bottoming signal. The price is pulled back to support. That's at the 80, 10, 75 area. And so to the extent that you've got the cojones and you want to try to take a long position out here, well, certainly now would be the time. And here you could use some kind of a tight stop out there. So that's what I see when I take a look at the markets. And the NASDAQ is really a great example of the overall markets. Now, we don't have to really stop there. In fact, we won't stop there. Let's do this here. Let me get it going on the other chart. And let's take a look at the New York Stock Exchange. Well, let's do it in a couple different ways. So let me punch this up here on the screen. And I use punch in a very kind way. And here's what you're also going to see. You're going to see a Rhodes momentum indicator bottom signal. Now, price right now is just about at the bottom of that hammer candle. Now, we can't trade the New York Stock Exchange, but even it generated a nice hammer candle, bull sash candle, generated a real nice bottoming signal. So, Steve-O, if it generated a bottom signal, would you please show me how often do you see that Rhodes momentum indicator signal here? Well, let's punch it up. And here you can see automatically drawn in by my system, meeting all my parameters. And you just need to know those parameters. I'm willing to teach you those parameters. These parameters can be used. I don't care if you use a 2-minute chart out there. You can use this set of tools that you and I take a look at. If you're a technician and you don't know these tools, why not? Why not? I'm not holding you ransom here. You get a free 30-day trial to go. You can, for 29 days, you can go take a look at it, try to implement it on your systems if you want out there, and it costs you nothing 29 days later. And that's a deal out there. May not be great karma if that's your intent, but that's a deal out there. But here, if we take a look at the New York Stock Exchange, you're seeing the other Rhodes momentum indicator bottom signals out here, and going back as far as we can. And they all tend to work out once they take hold. They all tend to work out pretty good. Here in the New York Stock Exchange, we're already back to 2003, and you can see. So look, it's not like this is a small sample that you and I are taking a look at. Now, does that mean that this pattern is going to work? No, you'll see time periods here, and I can't tell right now by looking at the bar chart which one of these early signals, whether they generate a bullish reversal candle or not. Right now, we're just taking a look at bottoms. I could throw the Rhodes momentum indicator top signals out there, but that's not what you and I are interested in, or we shouldn't be interested in as we speak right now. So we got these kind of signals all over the place. Now, does that mean that an absolute bottom is going to form? And the answer is no. Doesn't guarantee that. I wish I could guarantee that. What I can guarantee is if you know this pattern, this will be used to your advantage from the moment that you truly learn it and implement it, and it will assist you in being able to understand the emotion of the markets, which is really all that this is about. So if this is about the emotion of the market and that doesn't hold, and Peter asked the question, for me to really go through all of my tools or what have you to help you understand what the market is doing or likely doing. If we don't see a bottom here and we see it close below all the hammer candles and other bullish reversal signals that came place yesterday, what else might be going on? And the only thing that I can come up with, and I'm going to go and spend some time for subscribers today, tomorrow, as soon as I can find the time. But what may be going on, and I have shared some of this work with you gals, in the past. What may be going on, if you consider that right about an hour ago, the World Health Organization referred to the coronavirus as a pandemic out there. Not like that was a huge surprise, but still they did. But all the actions that are being taken across the world out here, for God's sakes, we got the National Guard up in New Rochelle, in New York. We'll come back to this. So the only thing that I can say is that maybe what's going on right now, we have to treat it like a wartime or skirmish type of a market out there. And that's completely different than the way that you and I just looked at it. The markets are signals for the first half hour. Steve Rhodes with TFNN. We'll be right back. We'll take a look at, for example, World War II. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, what I was suggesting is that yesterday was the number of bottom signals across the globe. All kinds of instruments out there is I couldn't even really pack it in my newsletter chart. If I tried to put all of the signals, all of the Rhodes momentum indicator signals where there was some type of bullish reversal candle that formed. So now what I'm saying is that's great, because we just took a look at, you and I just took a look at, the New York Stock Exchange, Qs. We could go take a look at all kinds of indices, take a look at that pattern, understand the importance of that pattern, especially as it confirms, for it's a 5-step process, only through step 2 through yesterday out here. But if that doesn't hold and the market just simply careens through it today, let's say going into the close, and as these technical tools begin to fail, not support and resistance though, then what may be going on? And what may be going on, or at least in my mind, is maybe the way that this needs to be looked at is really needs to be looked like when we see a war, when the stock market sees some type of war. And I can go back to World War I. We can go take a look at the Cuban Missile Crisis. We can go take a look at the Korean War, Operation Iraqi Freedom. We could take a look at the Persian Gulf War, the Korean War, September 11th. I don't know what else. Eisenhower's heart attack. We can go take a look at all of those instances. We can see how the market reacted. Right now, you're taking a look at World War II. You can see where the stock market was at. It's a line chart for the Dow. That's my historical chart, or one of my historical charts out there. And you can see on December 7th, 1941, where the stock market was, really right at Stevie's red arrow. And what typically will occur during the uncertainty of war is what the markets are doing. This is not going to be used. Typically is not used to identify the bottom tick. And so what I'm going to do for subscribers is go back, if we need to, go back and start taking a look at this and start taking a look at what other signals were going on during this move lower. Were there some Rhodes momentum indicator bottom signals? Were there seventh wave moves? Were there TD9 counts? What was going on down here? What truly identified the actual bottom? I'm sure we'll find a pattern down there, even if just an A to B equals CD pattern. But then the way that the Battle of the Coral Sea, so that was, a week or so after Midway? I think it was a week after Midway, one of my favorite movies that is out there. The old movie. I like the old movie better than the first movie, but I do believe the second movie is more factually correct. So I like that, but you just cannot beat the cast of characters, in my opinion, in the first. And that was, when was that? When was the first Midway movie put out there? Had to be, I'm thinking it's in the early 70s. And if somebody out there, somebody in the den will probably know, but that's not the point. The point is, though, you had Midway, and then you had the Battle of the Coral Sea, when Yamamoto went ahead and backed down and took a trip back to Tokyo out there. And it is the way inside the market, the way that the market will bottom is it senses. World War II didn't end at the Battle of the Coral Sea. We know that. That's for sure out here. But when we take a look at what the stock market did, was it sensed something optimistic. Something very optimistic. It's not just here. Using this as one example would be just, disgusting, would be horrible. Here, if we just even take a look at the Persian Gulf War, so something a little bit more recent, takes us back into the 90-91 time period. Here we can see when Iraqi forces attack Kuwait and what the stock market does. Then we can see the first sign of a bottom out here. Again, I don't know what type of pattern might have been forming. I'll go try to figure that out. But here, what I do know is that the reserve forces were called to active duty on August 2nd. Or 22nd, 1990. And that was right there at that bottom, and the market was sensing some type of positive outlook. That obviously didn't work out here. And here there were in November 8th, 1990, you had 100,000 U.S. troops that arrived. Then we had Operation Desert Storm commencing on January 16th, 1991. That was the bottom out there. But during wartime thinking with regard to the stock market charts, it's sensing for something optimistic. I don't see that optimistic thing yet inside the market. Do you? I don't see it. So I'm not saying that we're there yet, but I think that we should keep that in the back of our mind if we start seeing these patterns beginning to fail. Now, when I say beginning to fail, I'm just really talking about some nice counter trend rally here. I'm not sitting here saying this is the bottom of the bottom. Not at all. Not saying that. But enough of a viable bottom. And if it's not a viable bottom because of all those signals out there, that's where Stevie says, okay, we've got to come back here and take a look at, we got to start thinking maybe wartime. You talk to, the signal really came last night. A buddy of mine is CEO of a big healthcare company. Many of you would probably know this healthcare company. And so we were catching up yesterday, talking about some stuff. But when I was chatting with him about, actually, he was the one that brought up from a business standpoint, hey, kind of what's going on or what have you. He started saying, hey, we even have a war room. Well, here at TFNN right now, you and I were in the Stevie War Room. The Stevie War Room is taking a look at the charts out here. Are we to break? On the air. Yeah. Are we to break? No, I think we're good. Okay, sorry about that. My clock, I'm kind of screwed up here, but you already knew that. So, yeah, so I really think, so this is something to consider. You can go do the work yourself out there. I would suggest that you do it. So that's Stevie's thinking. That's a backup version of if this bottom doesn't hold, then that's what I believe we should look at. Now, Peter might have asked about new profiles. I'm sure Jay is interested. Jay, I don't know if these are showing up on your system. Using my advanced super Doppler tools out here, there are new profiles that are trying to form for the 4 equity futures contracts, the ES, the NQ, the YM, the Russell 2000. And as we take a look at the ES Mini out here, the bottom of that profile is 2739. Now, the old profile used to be bullish in structure. This one is actually bearish in structure. So to the extent that we bottomed yesterday, then what we would anticipate is price will begin to find resistance between 3004 and 3137. 3004 and 3137. That's as of right now, 1:37 in the afternoon. What I don't know is whether or not these profiles will hold up. I will have a better idea probably at 6:01 this evening or maybe sometime tomorrow morning. But 6:01 would be the first indication as to whether they're going to hold up. Now, inside the NQ, its new profile that's trying to form, the bottom is 81.71. Well, shoot, we're trading at 80.34 or so. So price is already below the bottom of that. So that's something to watch. The Dow Equity Futures contract, the bottom of its profile is 23.789. We're trading at 23.781. right now. So, and in the Russell 2000, price is below the bottom of its profile out there. So I'm not really, that's bearish for the Russell 2000, but I'm more focused on the ES, the NQ, the Dow Equity Futures contract. So price is at support right now, testing support on the, basically on the ES and the YM, the NQ, it's trading below it, but we've got a higher low out there, so I'm not completely sure. And we just, you know, we did that research. We spent some time, take a look at volume out there. Really, we've got this light volume move lower as we speak today. So that is the general marketplace. Oh, here's, you know, we talked about the New York Stock Exchange, right? Well, I say right. Yes, we did. We took a look at the New York Stock Exchange. So this is kind of interesting, too. And, oh, we'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, so what we were taking a look at before we went to that break, New York Stock Exchange, again, just to reiterate, yesterday was a nice hammer candle, confirms Rhodes momentum indicator bottom. Price must close above the bottom of that hammer candle for that pattern to remain in effect, or that bottom signal to remain in effect. That price is 11,794. Right now we're trading 11,225. Watch the close. Now, what was interesting about the Rhodes momentum indicator signal yesterday, yesterday's hammer candle, was it also confirmed the divergence that we saw with the advanced decline oscillator of the New York Stock Exchange, where it has rising bottoms right now, rising bottoms in the face of falling price. So yesterday, this pattern was confirmed with that bullish hammer candle. Now what we're also seeing, we're even seeing right now, this is a line chart, so it's going to all be about today's close versus 143. But we're also seeing price moving lower. There's a second divergence that has popped up that identifies bottoms out here inside the New York Stock Exchange. We now see prices moving lower, below the low from 2 days ago, the closing low of 2 days ago. And if you take a look at the very bottom panel of the chart, that's the spot volatility index, and that is not at a higher closing high as we speak. And that's also a divergence pattern. If you come back here on the lower left-hand side, you'll see that when the market was making a bottom back in May of 2019, you had that advanced decline oscillator divergence. You also had the spot volatility index divergence out here. So watch the close. It's going to be important. 11,794 again is the number. And to segue into the spot volatility index, because that's a question that Tom wrote in about, and Tom wanted to take a look at the spot volatility index and dust out here, or shorting the mining equities. So as we take a look at the spot volatility index, I think you're trying to take a short position. Let me just look at what you would be looking for. And so let me punch it in over here. And can we get that going? Come on, populate. There we go. So what Tom is taking a look at, or anybody that's interested in trying to short the spot volatility index, is a Rhodes momentum indicator top pattern. That formed out here with the shooting star. That's the trading day of March the 6th out there. There was just a slight close by a few pennies a few days ago, March 9th, that closed above it, but that immediately gave it up, and price is trading below that. So there's your topping signal. We also saw price moving higher again. That was a couple of days ago, but we don't have a bearish reversal candle after that. So to the extent that you want to take a short position, I would have to say that if you do, Tom, and I know you're an intraday trader, that if you were to see price close above 54.39, it gets real iffy. That's the high of that shooting star. That should be resistance. You really shouldn't see price close above that. Right now, your back is up against that wall. But at the same time, you want to see support inside the ES Mini for one of its time frames or what have you. So I understand the call, and if you're going to do it, watch 54.39 in the spot volatility index for that trade. Excuse me. With regard to the miners out here, and I'm going to go ahead and take a look at the GDX. Those will be the charts that we'll look at. Let me do this. Yeah, that's fine. I'll look at it like this. We'll look at it a couple of different ways out here. That's the first way. I don't have the profile, so let me just like to give you the information. So let's punch up the GDX. Let's see where this is at. So price right now, the GDX, Tom, is trading into potential support on its daily time frame. That's 2607. We're trading at 2625. At 2607 out here, it being so close to that, would you go ahead and take a short, anticipating that price is going to go lower? You're right up against support. So I would have to say I think you need to sit tight on that. If price does get below 2607, this is the GDX. Price, by the way, is below its bullish structured weekly profile. It's 2672. So it closed below 2607 on a daily basis, which suggests a move back to 2555. That is the bottom of its monthly bullish structured profile out there. In fact, I don't even need to go to my other charts, Tom. I think this is the best information that I can provide you with. And if we take a look at the GDX on a daily basis, what it's doing, the swing point is February 28th. And there's 166 million shares. And so far, Tom, this has traded 24.8 million shares. We're just going to call it 25. So 25 million shares. And it maybe will do 40 million. So price is pulling back into a swing point that had 166 million with 40 million shares out there. It still may be right to take the dust trade. I would be hesitant to do it out here. I'd rather you see GDX trading up towards the center of its profile on its daily basis, and that's 2735. And the reason is because that is a bearish structured profile. So the center level or 2799, those would be the two areas of attack. But right now at 2627, I don't see it. I don't see the reward risk. It might be the right trade. I just don't see the right reward risk. So I hope that helps you out, Tom. And thanks so much for writing in. As long as we were looking at that, we probably should go take a look at Goldilocks. We're going to take a look at Goldilocks. We might as well take a look at gold and how it's trading in all the currencies out here. Also, you've got a new profile that is formed for gold. And so, Tom, to the extent that you disregard what I had suggested, no problem there, then watch for support in gold at 1620. That would really be the level that you need to see gold break, close below, in order for any kind of trade like in dust to really, really get some kind of traction out here. As far as gold priced in all the other currencies out here, you made an intraday lower low in dollars, in euros, and that's it. You didn't make an intraday lower low today in yen or in pound sterling. So, Tom, I'd also not be looking to the extent that we know the gold and the miners are correlated with each other. I'm not seeing anything cratering just yet out there. If we take a look at Treasury bonds, what are Treasury bonds doing out here? There is a new profile. There's a new profile right now that's trying to form in Treasury bonds. The top of the box, 175.30, but it's just trying to form. So we're not going to. I wouldn't write that down with a Sharpie, with a what's the number? Is it a number 2 pencil? It's been such a long time since I've used a pencil, I think. But I think they used to call it a number 2 pencil, right? I think so. Used to play golf with the guy who used to make most of the pencils that we used in the world out there. What a great business that was for him. So Dow's off 1215, S&P 124. No other requests that I've got. Is there anything inside the Tiger's Den during the last 2 minutes out there that you want me to take a look at? Here's what we know so far. Again, just go back through what we were looking at. So far, the NQ holding breakout support out there, 80, 10, 75. Yeah, I know it's number 2 pencil. Yeah. What's the name of the company now? It was a lot of years ago. We were members at one of the same clubs out there, and I can't remember the name of it. In any event, that doesn't matter. You guys don't really care whether I can remember the name or not. Whoa! What the heck was that? I just went black. Oh, my screens went black. What the heck? Doo-doo, doo-doo, doo-doo. See if we get him back. Okay, there we go. What was that? Dixon Ticonderoga. Thank you, Mr. Bill. Dixon Ticonderoga. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. The Dow down 1270, S&P off 130, NASDAQ off 347 out there. So, the best thing that I can leave you with is just simply, well, what is the best thing I can leave you with? Let's switch over here. So it was a great story. The CEO, and I don't know if he's still the CEO or not, in Dixon Ticonderoga, Gino. I don't remember his last name, but the great story, his great personal story was he went on to become the CEO of that company, and he dropped out of high school. I think 10th grade, 11th grade, 9th grade, I think 10th or 11th grade, I can't recall, but he was so look, folks, you can set your mind to anything and you can do anything that you want in life. Anything that you want in life. Okay, I don't know why I went down that path, but I did go down that path. So what is it that Steve-O would leave you with? What would I leave you with? It would probably be this. And what you won't see out here, I guess I could do it. Yeah, you won't see it. Yeah, I'll just expand this up. You won't see the candles that formed yesterday. You can go back and take a look at it. But look at all these bottoming signals still in place right now. Look at all the indices. Look at the index ETFs. Look at the sectors inside the S&P 500. Look at some of the other sectors that are out here. And so that's what the market is really trying to do. And it should be able to bottom, and we should see a decent rally out of here. And if we don't, and we start to see prices close out the day below the lows of yesterday, especially if there are hammer candles out there, then my theory is wrong. And I think what we need to do is start taking a look at those wartime charts out there and anticipate that this market's not going to form any kind of serious, significant bottom until there's something very optimistic. So thanks so much for being here. Hope that today's session helped you. But if it didn't, don't worry. We've got two folks that will be able to help you out. Your favorite polar bear, David White, and then Tom O'Brien, who will take it home from 3 to 4. I'll be back with you on Thirsty Thursday. Have a wonderful Wednesday, folks.